DTN senior analyst Darin Newsom is our corn and soybean market analyst this week. The USDA's August crop report indicates better yields will lead to bigger crops of both corn and soybeans as compared to its estimates in July. 3 of the top 5 corn-producing states, Iowa, Nebraska, and Minnesota, are expected to achieve record yields. And Nebraska's projected soybean yield of 56 bushels an acre is anticipated to be the highest in the country and also the best on record in the state. We talked with Darin on Wednesday after the report and his accompanying webinar at DTN in Omaha.
In my webinar, basically summed it up in 2 words. One, the yield title that I put on the webinar, but mostly just wow. I mean, there was a real wow factor to this round of reports. I think things that most analysts, most in the industry, just didn't see coming, and that again was the yield numbers that were increased for both corn and soybeans.
So where did people expect yield to come in?
On both markets, we were looking, the average pre-report estimate came in at 164.4, somewhere in there, down a little over 2 bushels per acre on corn, and down about 1.5 bushels, so somewhere in that 44.5, 45 range on soybeans. It was 46 in July, and something like 166.8 in corn in July. And so that was what everyone was anticipating. That was what seemed to be built into the market as well, was the idea that we were going to see these reduced yields bringing down production. When all was said and done, corn yield was actually increased 2 bushels per acre over the July estimate, as far as national average goes, up to 168.6 or something like that. And soybeans came in at 46.9, so almost a full bushel per acre above what was seen in July. So, from the very second those numbers were released, the markets just fell apart as traders worldwide reacted.
Do you think the yields were reflective of what we've seen in crop conditions, because there's been a big difference between eastern and western?
Mm-hmm. The crop condition, here's the interesting thing, that NASA's weekly crop condition numbers really are irrelevant because USDA doesn't look at them when establishing yield expectations. The methodology for collecting that data is also questionable, but if we really take a step back and look at the conditions that did improve from, say, mid-July through the end of the month when these numbers were tabulated, we do see that makes a bit of an argument for some better yield numbers than what we saw in the July reports, when, because that was done after a June that had seen a lot of rainfall, some very poor field conditions. So again, having a moment to reflect on it, it's not as illogical as it might have sounded right off the bat.
How did the stocks numbers play into this today?
Stocks were affected, obviously, by the increased production numbers. We saw increases in stocks for both corn and soybeans. Corn came in like at 1.7 billion bushels, up a little bit from 1.699 in July. And soybeans climbed to 470 million bushels, which is just an astronomical number for domestic soybeans. Now, of the two, I really tend to disagree with the soybean number. USDA always has a hard time calculating domestic soybean stocks, and I don't think they're that close this time around either. It's in complete disagreement with what the market's been saying all along. But it is what it is, and it was a huge number, and the market reacted.
So we're at Wednesday, right? Barring what happens Thursday and Friday, tell me where we've gone here with both corn and soybean markets, with big movements on Monday, Tuesday, and today on Wednesday.
Well, going back to last Friday when we saw a strong up move, followed through with it on Monday, we were just on the brink of really seeing a bullish breakout, and then to come down Tuesday and collapse on Wednesday, we did some major chart damage, particularly in the soybean market, with the November contract going below last October's low of 904. And by all appearances right now, looks like these markets are going to continue to struggle. So I think we've done some chart damage. I'm probably one of the last bullish market analysts in existence, and even I realize the problems that are going on right now. I realize that these markets are going to have to find some buying very soon, or we're looking at a major slide starting.
Your bullishness was because of the charts, though, so we've shredded that up enough that it's concerning you.
Yes, we have. Now, the spread charts, they're still bullish, but the futures price charts and the cash price charts themselves all of a sudden look very bearish. and it's that dip below the October low, particularly in the soybean market, that's the most concerning to me. Corn's still holding where it needs to, above 351. It may try to stabilize, but that soybean move today, that's what really has my attention.
Is the demand environment becoming concerning, specifically the demand environment for exports, when you factor in the strength of the dollar and what's happening in China this week?
You know, this China news has really been interesting to watch play out. They devalued the yuan, and the reaction in both financial and commodity markets has been to see some selling come in. But crude oil was able to turn back around, and it looked like soybeans were going to be able to stabilize as well. Now, the overall export situation, demand for both corn and soybeans is expected to go up in 2015-2016 above what we saw in 2014-15. But yet the U.S. is going to play a smaller role. Doesn't really make a lot of sense to me. I know there's a lot of supplies, particularly in soybeans in South America, but the U.S. is still the #1 producer of corn in the world. So to say that we're going to see exports trimmed even further from what we saw this year, I think there's a lot of time yet to see if that actually happens.
So maybe this is a lazy question, but you know, after what we've seen today, where do we go from here in terms of trying to think about our selling strategies?
Well, selling strategies are going to be very difficult at this point. I think a lot depends on what happens, not only the balance of this week, but what happens next week. You know, and when we start to get some more weather news in, some more headlines coming in, if we can't start to stabilize these markets and maybe give us some opportunities to get some more sales on the books for this new crop. If not, if we actually break through, and let's say we see soybeans go below the $9 level and we see corn take out that 350 level, it's going to be very difficult to get new sales on, at least here over the next 30 days.